Hello YouTube, my name is Philip, this is my brother Andrew. Now we've been in real estate for over a decade, buying houses, accumulating real estate. Now a lot of people feel like the market is too expensive now, too hot, I missed my chance to get in.
Too late. It's too late.
It's not too late.
It's not too late. See, real estate feels like it's too late. I've known friends of mine who have been sitting on the sidelines since 2015 waiting for the market to correct, and they're still waiting. I personally thought the market was going to correct in 2018. And it hasn't. And in all likelihood, it probably won't. So, okay, if it's not going to correct, but the market's still so hot, there's no properties to buy, everything's going over asking, how are you going to get that discount, that BRRRR deal or that flip deal? And you're probably not.
I mean, you could technically, but yeah,
I mean, there are a few out there, we've gotten some in between, but for the most part, as we stated in a previous video, the BRRRR method, the buy, rehab, rent, refinance, repeat method, where you're getting 25% margins or even flipping with a 25% margin is extremely difficult. Why would anyone sell to you without just listing it for
getting
full market?
20 over asking?
Of course, there are people who do. They want it even faster. They don't want to deal with it. There are exceptions, of course. But the BRRRR method is sort of hibernating. It's not the way to go. But that just because that's not the way to go doesn't mean that there's no way to get into real estate, and there's no good way to get into real estate.
Unfortunately, there's an amazing way to get into real estate right now, specifically for new investors.
Yes, and that is basically house hacking. I mean, I would say, generally speaking, there are two great ways to start in real estate. They're both kind of similar. They are either one, buying a home to live in, and
usually a little bit beneath your means.
A little bit beneath your means. Don't stretch. Do the opposite of what the United States is famous for doing.
A little bit smaller in Texas.
Yeah, a little smaller, a little bit less.
Smaller monthly payment is really
smaller
the thing. Save up more money.
Not as nice, not as big. And then hold that as a rental when you move on to the next one.
Yes.
The other one is house hacking, and that is it's thought of as you buy a house that needs to be worked on and you fix it yourself. Now, you don't have to fix it yourself. You could live there and have your friends come in or hire a contractor or whatever. You don't have to be a handy person. We got to be politically correct here. A handy person to house hack.
Yes.
You also don't need to buy a fixer. I mean, in sort of the broad spectrum of house hacking, anything you are buying to live in that is you're planning to use as an investment. And the reason it's so beneficial to buy a home to live in first, whether you're buying it to fix it up or buying it just to live in is perfectly fine, but you're going to keep it as a rental, is because those interest rates.
Yeah, they are very, very, very low. And in fact, just by having a loan at 3% or 3.5%, whatever,
even 4%,
and inflation being at 7 or 7.5%, just by having that loan and paying it off, you're actually making wealth every month.
Growing it. And we get pretty good loans on our investment properties right now. They're 4.25%, 4.5%. But I mean, I got a 3% interest loan on my house by personal residence. I've heard of people getting 2s.
Yeah,
it's
wild.
It's a borderline farce what people are getting, especially with inflation being so high. But it's not just that. On our investment properties, we're in the Midwest. We pay 20-year amortization on almost all of them. And the West Coast or the East Coast, they'll do 30-year amps. But you're always going to be getting 30-year amortizations
on homeowner
with homeowner loans. It's just a lower payment. It's easier to make do. And the LTV, the loan to value, it's usually 75%. On investment properties, we need to put 25% down. On even with bank loans, I got 5% down on just a conventional loan. If you go to get an FHA loan or a 203K loan for just the FHA for properties that need rehab, it's 3.5% down.
Yeah.
Now
there's lots of other programs too, just first-time home buying programs. Stuff from the military. Yeah.
The gurus who say you can do real estate with no money down are lying. You still need a little bit. 3.5% on a $300,000-$400,000 house is a decent chunk of change.
Yeah.
But you can save up to that. You can get your foot in the door. And with FHA, and I think a lot of the conventional ones, you don't have to settle for a house. You can buy a duplex. You can buy anything to a fourplex.
Yeah.
And this is a great way to
lock in a low interest rate, have inflation be basically paying off your loan for you, because the dollars left on your loan aren't worth as much as time moves on. So
with an incredible interest rate and a great amortization.
Now, there's always a problem in real estate. I mean, it used to be interest rates were 15%. Now prices are $1 million. There's always a problem, and it's different problems for different people.
No one was loaning any money back in 2010 when real estate was so cheap. Now it's so expensive, but the loans are incredible.
Yeah, so you haven't missed out.
Yeah.
There's a different, especially for people new to real estate, house hacking is tough for someone who already has 30 properties or something. They probably don't want to deal with all the nonsense
if you don't want to live in a property, like if you're very well-to-do and you don't want to live in a property that's either not quite up to where you want it to be, or not big enough for your family, or not you don't want to do the work and rehab a property while you're living there. I mean, that's perfectly understandable. But for new investors,
it's a great way to get
who are willing to get either do some elbow grease or live beneath your means for a while. I mean, the glass is half full. There are great opportunities here, and the opportunity for house hacking in this market.
It's the best time I've ever seen for it.
You're not going to get the great discount, but you can still probably find a 10% discount, and then the loans you can get are so good.
Yeah.
Especially compared to inflation, that it makes the deal so much better. A deal is not just how what price you're getting it for. It's a series of components that all fit together, and the financing is a critical one. And taking advantage of that as either a homeowner living beneath your means at a property you plan on moving out of, and then renting out, or a house hacker.
And a lot of people who try to move into real estate are people who are coming from traditional jobs and stuff like that. They have that W-2 income, and that's great. Hold on to that. That's the best way to get a loan for a house hack.
In fact, W-2 income, like people push it, like saying like W-2 income.
A lot of real estate people are saying like, "Oh, get rid of your job. Real estate's the way."
That is like
nonsense.
The red flag. That's like the line in the sand between like some real estate influencer or some intellectual real estate whatever, and a guru who's just trying to sell you stuff.
Yeah.
If they're telling you to quit your job, that you need to get out of your job as quick as possible, they are charlatans.
The best way to get into real estate is to keep your W-2 income as long as you can to get those loans to get the real estate until you have a base.
And, you need some savings. If the first thing to tell, if people say I want to get into real estate and I have terrible credit and no savings, okay, first thing, fix your credit and build up your savings. That's the first step. Yeah. And gurus aren't going to tell you that because they want your money.
Quit your job and start wholesaling.
Yeah, it's like you need some money. You need that 3.5% or whatever it is. You need good credit so you can get the FHA loan. They usually want you to be on the job for a bit. But once you've got that built up, I mean, this is an incredible opportunity. Yes, it will be hard to find a good property with any sort of discount. It'll be hard to find anything, but getting that financing makes the deal so worth it. Especially if you can get a long-term fixed rate. That's critical. No adjustables right now. Fixed rates.
Yeah, it'll make it so you're making wealth, your loan's getting paid down by inflation, and over time, then you move on to the next one, and it's not too late for you to get into a great deal. The great deal isn't the price. The great deal is the loan.
And the process, and remember, this isn't a one-time thing. You can do this over and over again. You can buy, even if you buy a house, buy in the house, live there, fix it up maybe, then move out, rent it out, move to the next one, do the same thing. With these FHA loans, you can refinance them out with a conventional, or with conventionals, you can get another one after a year or so. You can only have one FHA loan at a time, but if you refinance it out with a bank, with a conventional loan, you can get another FHA loan.
I mean, I know a guy who lives in Portland, Oregon, who bought a fourplex a couple years ago. Mm-hmm. He didn't get a great deal on the fourplex, but he's done great with the property because he owns 4 units at an incredibly great interest rate, and the inflation has just made the prices of real estate go up. So he's got a lot of value.
I got a friend in upstate New York who's basically house hacked to eight or 9 houses right now. Yeah. He's doing great. And I mean, if you want to know more about house hacking, I also recommend you check out my friend Craig Kurlop's book on house hacking. He'll give you more specifics about the process itself. But this is if you're sitting on the sideline waiting like, oh man, I missed it. You haven't. You just got to change your strategy and change your perspective.
Now the real estate market is expensive.
Really.
So if you want to know why the market's expensive, watch this video right here. And subscribe.